What's up, everybody? Good day, good afternoon, and good evening to everybody in the crypto community, everybody here, wherever you're at around the world. My name is Kelly Kellum. Welcome to BitLab Academy daily live streams. I really appreciate all you being here. I love the community that we're building, encouraging empowerment, data. We're trading on data. We're not trading on emotions, trying to bridge that gap from beginner to pro. So thank you for tuning in. Please make sure you hit that like bell, hit that subscribe bell, ding that bell. And if you're watching on another channel like a Hit Network where this does restream, make sure you hit all those socials down below. Go to bitlabacademy.com. We're going to be jumping straight into this. I'm trying to make more of an effort to get to this a lot quicker, get through the beginning so we can get to the data that you want. So again, my name is Kelly Kellum. Again, hit that like button, ting that bell, hit subscribe, join us here in the BitLab community. We're going to go ahead and jump right on into it today. But before we do that, I just want to check in with chat, check in with the crowd here. How's everybody doing? We've got Matt C., Brad Guidell, a mellow fellow, Alex Green, Karen Swigart Harris. We got so many people here. I mean, golly, we already built such a great community. Put a 1 in chat today if you're bullish for the FOMC. Put a 2 in chat if you think we're going to get a higher rate hike than 50 basis points, meaning that we will likely tumble a little bit. But all this is going to be good in the long run. And we got some excellent signals that I'm going to be sharing with you today, as well as diving into the charts. Put in the last coin that you DCA'd into and the next coin you're hoping to DCA into. Let's get some engagement in chat. Let's get some community going. Let's all be empowering and encouraging to each other. And now let's go ahead and jump right on into the charts. So this is quite a funny meme. Morel showed this to me earlier today. I thought you'd all like that. But before we continue on, make sure that you follow BitLab Academy, which is at Academy BitLab. And of course, come over here and follow my Twitter, which is at Kelly Kellum. That's Kellam, not UM, Kelloy, Kellam. And of course, this is our free daily stream, but if you want to go deeper, if you want a little bit more of a personalized touch and shorter focused video on every specific topic you can imagine within crypto, whether it's candles, patterns, TA, charting, analysis, on-chain, NFTs, all of it is inside BitLab Academy. And we're just about this. It's February now. This month, we're starting to roll out the new website and all of the amazing new content that we have. And you can just find that over here at bitlabacademy.com. Make sure you enter your email here. We just did a 5-winner giveaway, and anybody that did one, I'm getting you set up this morning. I already have my team on it, so don't worry about that. It's coming your way. We're doing 1 winner each month now, and you'll be 1 month free access to courses and the indicators as well. When you sign up for this, you get access to our weekly newsletter, which gives you those updates on what's happening in BitLab, as well as some free alpha, free charts, free just data on what's going on in the market, so you can have some idea, better, more informed idea of how you can engage with everything happening in the market. So back to you all. I hope you're all doing well. I appreciate you all being here. I'm really enjoying building this community. We just got past that 4,000 watch hour sort of mark. So the channel is now monetized. We will be donating a portion of every bit of profit that we generate here at YouTube to a charity. I've already been working on with TJ and Ben about what charity it can be. If you don't know, if you've ever seen me walk on camera on the BitBoy stream when I've done TA there, or even when I'm, kind of stumbling around here, I was in 2, nearly fatal accidents. First one being in 2003. Second one being in 2015. And so, I've lived with disabilities, physical disabilities, for basically all of my adult life. Of course, I have thrived because I go after I don't let anything hold me back, but I'm kind of trying to urge them into, making the charity that we donate. It'll be a significant portion of the profits here that will go to, 1, as a scholarship fund for BitLab Academy, and 2, the majority of it will go to, I'd like it to go to children with disabilities. So now that we've got all that out of the way, and we did it in under 6 minutes, that was my goal, getting it around 5-6 minutes intro so we can jump right on into it. So what I wanted to talk about today is generational buy signals. How do we identify that best opportunity to get into the market? Not just buying, buying dips and then trading the pumps and then buying dips, That's a useful skill, and it's very profitable when you do it well. However, some of the most profitable traders in the world, or I should say investors, find those opportunities in the market where everybody's fearful. And so how are they doing that? What signals are they looking at, and which ones are flashing right now that are suggesting that Bitcoin and crypto markets are set to explode into 2020 through 2023 into 2025 with some hiccups along the way, of course. But these low accumulation zones are the ones that we want to get into. So quick shout out to chat one more time. If you have DCA'd within the last week, put in DCA'd. If you have not, just type in waiting to DCA. I'm curious where you guys are at. I'm curious how the market, how the community is engaging with everything that's going on in the markets right now. But I'm just happy you're here. This is all about you guys trying to share our experience so you can get over, you can get through these markets without a lot of the mistakes that a lot of us have made early on. So we're jumping into the charts. Let's do it. So here we go. So this right here, just take a look at this graph. What is it showing? Well, what do we always do? What have I said on many streams so far? What do we do anytime we go through any chart, any graph when we're first looking at it? We want to go through every bit of data that we can see on it and then try to analyze it and then try to pull insights from it. You can see here, this is US dollar in trillions, total yearly output value. And we have, year over year sort of metrics. These were July, June, May, but it's basically year over year. But what is this? Well, the other caveat here, we can see the Bitcoin network has processed 60, and I don't even know how many zeros, because I'm used to having, when I was younger, zeros in my bank account. And only in the last 5 or 6 years since I got into investing and trading crypto have I had the zeros go on the other side of this number here. Instead of having a bunch of zeros in front of it on my bank account, I'm starting to stack those zeros, and I want to help all of you stack those zeros too. But this is, I believe, $60 trillion worth of transactions in 2022. Now, okay, how significant is that? Well, if we look at the growth here, and in this case, what we're doing, this is known as quantitative fundamental analysis. So we have technical analysis, which would be coming here on the charts and doing our trend lines and mapping things out. This is technical analysis. Fundamental analysis, there's two types, quantitative and qualitative, meaning things you can measure and things that signify quality and potential longevity because it has a strong team or utility and these sorts of things. So looking at this metric, this quantitative fundamental analysis is showing that the use case of Bitcoin has gone exponential. I mean, look at this, about 17 or 18 trillion in the year of 2020 to 2021. 2020 to 2021. And we can see that between this year and 2022, an exponential increase, very large in magnitude to the previous increases. Now, why does this matter? Why does this matter? This is significant because if we look at the charts, and what do? Micro, midterm, micro. Macro, midterm, micro. Excuse me. So we can see if we go to the macro, let's go to the weekly. We can see this is the end of 2021. Here we go into 2022. 2022 was marred by a downtrend the entire year. So price was falling. And what this is on the right, when you see the price of an asset on any chart or any ticker on CNBC, on any of these crypto YouTube shows, what you're seeing when you see the price of any asset is this is the speculative value of the asset. This, in the long run, really means, I don't want to say means nothing to investors, but truly wealthy people within markets are not looking at the price for their entries. What they're looking at is data like this. They're looking at fundamental growth in a market and projecting out how that adoption rate is going to go, how the utility growth is going to be over time, how just these fundamental developments, especially in periods like this where you're having a downward trend in price. Because what is this signifying? This is signifying that There's fundamental growth in the market, meaning the value of this asset is intrinsically going up, the true value of it, because the network's larger, because there's more use across this monetary storage or monetary payment rail that is Bitcoin. Okay, and Bitcoin is an excellent bellwether for the health of the entire crypto market because it makes up about it makes up about 44%, 42% or so, maybe 41%. We come over CoinMarketCap.com. And we can see right here across the top, we have a market cap of all crypto that is in the crypto ecosystem, at least the majority, because I'm sure CoinMarketCap doesn't list every single crypto because there's new ones that are coming out every day. But for the most part, you can gauge this as the total for the 99% of the total of all crypto that is out there. We have $1 trillion market cap, and the Bitcoin dominance is 42.5%. This means that of the $1 trillion, $1,045 million market cap of all crypto, Bitcoin makes up 42% of that $1 trillion market cap. And you can also see that right here looking further down with Bitcoin. Today it's right about $23,000, and we're going to have some fireworks today, baby. We got the FOMC. We got earnings all week. I mean, massive earnings from major tech institutions, oil companies, major sort of pharmaceutical conglomerates. All of these things are going to have a massive impact on what's going on in the market in the short term. So we can see back to what we're saying. Bitcoin has $444 billion market cap, meaning every Bitcoin that's available right now that has been minted and is out in supply, which is 19,278,000. And we have to also consider there's believed to be somewhere between 4 and 6 million Bitcoin that have already been lost from very early adopters that basically didn't know how to manage their crypto, lost it in landfills, threw away hard drives, etc. So we have actually less circulating supply than this in reality. But of this multiplied times this price, the circulating supply multiplied by the price, that's how we're getting this market cap. So this 444 billion is a pretty big chunk. Actually, it's 42.5% chunk of this trillion. So Bitcoin is the bellwether. It is the signal for the health of the crypto market, because if this is, let's say, the least risky asset within the entire ecosystem of crypto, if people are risk off about Bitcoin, they're going to be very large in part risk off about smaller market caps, because they are intrinsically going to be more volatile, because there's less money, there's less liquidity within each one of these assets. The further you go down this CoinMarketCap ranking, the more volatile this asset is going to be, because there's less liquidity in it, and that's marked by having a smaller market cap. In addition to that, and I'm going to make an entire video on this later, you don't want to pick your entries on coins because, for instance, Cardano, and I love Cardano, or Dogecoin. I'm going to get a bunch of Dogecoin because it's 9 cents. What if it goes up to 23,000? Well, first off, that's not going to happen. Look at the total number of circulating supply. That is 132 billion. 132 billion versus 19 million, which is why the price is higher here. But this is a whole nother lesson, a whole nother video that we can go into on another, basically picking coins and how we identify good assets to acquire for our portfolios. What we're talking about today are these generational signals. What's going on with the market right now is very scary for today, because we're not entirely sure if we're going to get that 25 basis point hike from Jerome Powell and the Fed. I mentioned yesterday, there's a likelihood that they do go higher and then come out very dovish, very soft in the press conference. But either way, if we're trading our entire portfolio based on what the news is today, that means we don't really understand what our time horizon is, unless you are specifically only a scalper doing very short-term trades. And in addition to that, it means that we're not projecting. What's the word I'm looking for? We are not forecasting likely market movements over the course of a longer period of time. And when we don't do that, then that means that we don't have a sophisticated or well worked out strategy or plan of action of how to trade the market over a longer period of time. So what we are going to do is we are going to look at these charts and look at some of these things. We see the fundamental growth over all of 2022. So this would start signaling to me, as I'm seeing this break new all-time highs over the course of the year, this fundamental analysis would start signaling to me to start looking out for other signals that start brewing on the monthly time frame, on the weekly time frame, and then continually going from the longer time frames on charts to looking at signals smaller and smaller and smaller, because the larger time frames will give you sort of a forecasted heads up to look deeper at, from the monthly to the weekly to the 3-day or 1 day, the 1 day to the 8-hour or 4-hour, and then go down from the 4-hour to specifically find your entries, because you're seeing over a larger period of time that the market is building up the support for a move. And now once you have that grander context on the macro, when you do zoom into the micro, to the local, the very smaller time frames, you can find a very bullish setup on a smaller time frame that is supported by those macro time frames. And now you have a winning trade that doesn't just push up 2%, but you can catch those moves going all the way from, somewhere in these levels here and ride it all the way up as far as you can until signals on the macro and then the midterm and the micro signal for your exit. So that's what we're trying to do here. That's what we're trying to do here at BitLab Academy within our actual bitlabacademy.com courses, walking you through every step of that. But then here on the daily live streams, taking a lot of the course content and materials and lessons and sort of blending them together on a little bit more surface level, because I can't go into as much depth and detail on the daily streams, because we have to talk about what's happening in the markets, and there's so much to do here. But I do want to point out, if you go down into the description, you will also see I'm going to start including in every description 2 videos that I've already recorded that give you more context on whether it's charting or TA or understanding support and resistance. So if you are a true beginner, if you are feeling lost, you can definitely check down in the description. But also, I do want to shout out that you can come over here and also if you're watching anywhere else, come over here to the BitLab Academy YouTube page, which is youtube.com/BitLab Academy. And you can come in here to live and check out the titles here and figure out any of these titles that you're interested in learning more about, or come over here to playlists. And I'm slowly building out this daily alpha series with more focused content that isn't, it's all meant to be purely evergreen, no matter what day or month of the year, whether it's now or in 6 months. So let's continue going through some of these data points. We have the fundamental analysis growing. That signified to start looking at the technical analysis to identify the entry. And one of the things, this is from a few weeks ago, but what I want to point out here is, first, what's the chart? Well, let's look at it. Okay, we have the Bitcoin over US dollar pairing. This is it looks like the 2-month chart. That's the 2M. If this was a 2-minute chart, it would be all over the place. This is a 2-month chart, and we can see the stochastic RSI flipping bearishly, and that also followed with a bear market. And we can see when this flips, when the quicker moving average here flips over the longer term moving average on the stochastic RSI, we see that this also signaled near market bottoms and allowed you to ride all the way to the top. And we see right where we're at right now, this also signaled even here. If you were just only using this metric, you would have known, if you did take a long here, that it was likely a good place to quickly look for pivots to exit the position, because this was already signaling before this pushed up to the new all-time high. This was signaled by a lot of retail investors coming in, not institutional, and there's other metrics we can look at for that. But this signaled the bear market, and now this is starting to flip to buy. Now, if we come over here, what I want you to notice with this is a very different chart as compared to other on-chain data charts and technical analysis charts. This is a spiral chart, and it's marking out, it's more of a time-based chart, so you can see across how many blocks are confirmed and processed, and miners process on the Bitcoin blockchain. and it shows where the halvings are, all perfectly lined up, of course, because they happen every specific number of blocks. In this case, I think it's 210,000 blocks. I could be wrong, but it's around then. And then from that halving forward, we can see over, and this is where Bitcoin started. We can also see the price action getting, this is why it's moving out of the spiral, because the price action is getting higher and higher. But we can see all this information we have on the left. But my main point here is just going, you can go through all this on your own, and you should definitely follow this guy here at The Rational Root. Excellent chartist, excellent analyst in the market. But look at where our bottom is. These maroon dots on the price action, look at where these bottoms have lined up in the past and where we're at today. We're perfectly in time, right in context with that 4-year cycle, which is based on the Bitcoin halvings. Halvings meaning the rewards being cut in half every 210,000 blocks. Okay, so we see that we're somewhat on the right time frame. We also saw that the stochastic RSI is showing that momentum and opportunity is starting to present. We see that fundamental analysis, you see the fundamental quantitative analysis is showing exponential growth in the use case of Bitcoin. So now let's continue on here. Okay, well, this is also a further exemplification of the halving process. And we can see when we're about 66% of the way to the next halving, it's also marked about where the bottom has been. And we're right in that context now. And this is from the January 7th. And we've already seen that. You see how this is starting to push up? This started to push up. We would be just a little bit further, probably about to where this line is here, because that's February 1st. Somewhere in here. And we've already started to push up. Now, going to the next chart, we can see that we have also passed the long-term holder cost basis. Okay. What is the long-term holder cost basis? This is dividing the total amount, the cost of Bitcoin across all the Bitcoin held for longer than 155 days. So you're averaging the value of the last time Bitcoin moved, or when each one of those holders bought. And you can see, so you're seeing long-term holders buy at bottoms, near bottoms, bottom zones, and they sell, they take profits into the strength of these bull runs, And so taking profit into the strength of these bull runs also changes the value of those coins, which is why you get the steep moving average going up. In addition to that, those cohorts that are consistently long-term holders, when they do purchase again, for instance, when there's large dips or something that areas that they're seeing as opportunity, we're seeing a rise in this average cost. Now, as we see historically, we can see that when the price action, which is this pink line, comes down below the long-term holder cost basis, this is marked. This can signify a very strong accumulation zone. And what do I mean by that? Well, let's come back over to my page, and we are going to bring up this chart that I brought up on every stream. That is this accumulation zone right here, or after the market cycle on the macro fully plays out somewhere in this region here. So this would be, in this example, like the long-term holder cost basis, not just a trend line. And we can see that when we do go below that, although there is volatility and breakdowns and false pumps, and doesn't matter, long-term holders, people that are looking to really take advantage of this move, are not particularly worried when we're down at these lower levels. When that amount of time is played out on this 4-year cycle, we're at that 66% of time to the next halving. And we're below these key levels. They identify, alrighty. They identify these as good accumulation zones, so they're not worried about this volatility, because this is what they're looking forward to. Having these pumps, if it does pump up, they get excited. You know, everybody gets excited when markets pump, but if it pulls back, they DCA and add to their position. So as we are right here, we can see all of this historically as this signal relates to the market and where price action has gone. It does suggest that where we're at right now is a good accumulation zone buying opportunity. I do think we will get some sort of pullback, as I've talked about on every stream, but where we're at is historically shown as good opportunity zone for catching a generational opportunity zone to catch these massive pushes up. Even here, if you caught somewhere here, even as we broke this long-term holder cost basis and rode this up from here, this was about $3,500 up to about $13,900. That's a pretty large gain. And using the skills and techniques and strategies that we talk about here on the daily stream on BitLab Academy, as well as on the Alpha series that we have here on the YouTube, and even more so within the BitLab Academy courses, we teach you how to start looking out for those divergences on RSIs, stochastics, on the BitLab indicators, which point all these things out, seeing that this was a good opportunity to take profit. And then when you get this next crash and we're down below the long-term holder cost basis, excellent opportunity to buy again, to ride this wave all the way up, take profits into this. Now we're down below here again in this generational buy opportunity zone. Right now, we're in it. We have been in it. Can we have a pullback? Yes. But for me, that's adding position pullback. So I'm not saying it is for you, but looking at how this technical analysis is played out with price action over time, that's what I'm seeing. Now let's continue on here. Now we can see here, now this is major index combined hedger position. Now what does this mean? What we're talking about here, this is traditional assets. And why, and I've said this before, why am I looking at traditional assets like Dow Jones, the SPY, the dollar index, any of these sort of things when I'm so interested in Bitcoin and crypto? All of these things, they work in concert with each other because they have direct impact on understanding where the mindset of people are in the market, where if there's liquidity coming into markets for investment or not, especially being that Bitcoin and crypto are considered to be more volatile than most traditional assets. It's still lumped in with this idea of a risk-on sort of asset class as a whole from Bitcoin and crypto. I like to distinguish the difference between Bitcoin and crypto. I think of Bitcoin as its own asset class, and I think of crypto being Ethereum and all the altcoins as being its own asset class as well, because of the nature of how they're engineered and also the amount of liquidity and stability due to that liquidity comparatively in Bitcoin versus other all the other altcoins. Now, of course, Ethereum is in a much better position in terms of how much liquidity they have and how large their market cap is. That's a whole nother argument, and everybody has their own thoughts on this. But this is looking at these. This is looking at these major index. Dow Jones index, the S&P 500, which is an index, which is looking at essentially, I don't want to say the average, but it's a cumulative sort of metric reading everything that's going on. And we can actually even pull this up if we come over here. And if you haven't yet, go and watch the Chart Like a Pro video. If you go down into the bottom of the BitLab Academy, I don't know where it's at. It doesn't matter. If you go to the bottom of the BitLab Academy in the description, there is Chart Like a Pro, I think, or Pro Trading View. Set up these templates so you can do this quickly like I do. I have my Bitcoin, Ethereum, altcoins, and now what I'm doing here is I have another template saved. I can quickly go to it, not having to pull each individual one up. I look at the S&P 500. I look at the Dow Jones Industrial. I look at the US 100. Sometimes I'll put a major tech stock like semiconductors or AMD or something like that. But I like to get a broader view on what's happening in the market. And we can see we broke a sort of major trend line here. And we're trying to confirm this, which we have had a bit of a pullback on the S&P 500. And we can actually click on this, press option, and click on this, and that brings it full screen. Anytime I say option, when I'm clicking on things and doing quick keys on TradingView, I want everybody to know option is because I use Mac. If you do use PC, the same thing with Alt. You can do all the quick keys with Alt, and then whether it's Alt J, Alt T, Alt F, Alt H, or Alt, click on the screen and bring up the full window or smaller window. And you can set up these windows right here, right next to where the square is. Yours probably will look like this, but that's a whole nother thing. Watch that Chart Like a Pro video. So coming back here, we can see this is trying to confirm this breakout by this small pullback. We are getting a bit of a bounce here, but everything everything is on a knife's edge right now in the short term, not in the long term. In the short to medium term, midterm, everybody's waiting to see what the Fed's going to do today based on the data that we got last week or I think it was last week or the week before, from the CPI, which is Consumer Price Index, the PCE, which is personal consumption expenditure, PCI. There's so many data points that these economists utilize, and these Fed people, the members of the Fed, utilize to gauge where the market is, where they can forecast the market is going based on income, based on spending, based on revenue. All these things paint the picture to what the mentality is going to be, the psychology of the market. And to be frank, and I was talking about this yesterday in one of the BitLab courses I was recording, one of the new lessons, is the fact that this price action that we see on any asset class that you're looking at, whether it's crypto, Bitcoin, traditional assets, this price action you see on any chart is merely a visual representation graphing the psychology of the market. That's what every price action chart is. That is what you are doing when you are trying to do technical analysis, is forecast where price action could go based on previous responses in the market, based on what's happening in price action, following certain trends and breaking certain trends. That's essentially what we're doing when we're doing technical analysis. And we can see right now, this is stalling out because the psychology of the market is still hesitating until we get a clearer picture of what happens today with the Fed, so they know what happens with the interest rates, so that we can project further. So I want to come out of this, and we can see that this is consolidating sideways. The US 100 has pushed up, and it's, if we bring this up, look at this. This is a very large W formation, or double bottom. Option T. I can draw my trend line. We've got a bit of a double bottom here, as we can see. I'm going to zoom out there. This is actually a bit of a triple bottom. Boom, boom, boom. So this will, if we get good news today, this will likely break through. If we don't, then this will likely reject back and come down and retest these lows here. And whatever asset you're looking at, you want to know what that top and bottom of each side of a pattern is, so you can plan out what you're doing. But getting back to what we're talking about, looking at all this data, and this major index combined hedger position, each one of these indexes is basically looking, for instance, S&P 500. It's the 500 stocks that they have in there, and it's mapping the aggregate, not value, but the aggregate sort of average of if money's coming into it as a whole on average, or coming out. Same thing with the Dow Jones Index. This is all of the more industrial sort of stocks and infrastructure stocks and such that are within the Dow Jones, and this is seeing aggregate as money coming in or coming out across all of these various assets. So when we look at this data point, we can see that the major index combined hedger position is net long. We did have a bit of a pullback, and we see right here where these, I don't like using this overbought and oversold. I look at it as strength, and we can play to when the strength has been sort of exhausted, then next to is cyclical. Next to come after strength is weakness. But we saw that weakness here, and we did pull back, and but we are still very strong comparatively. And there's a lot of stuff. This is moving to the upside. One could argue that you could counter trade this, because if everything is net long, then maybe this is going to signal a very large crash to come. But currently, as it is right now, this move has pulled back and is pushing up. So I'm just pointing this out here. Now we can also see right here where we're at with the 10-year treasury yields have been moving sideways since the breakdown of its macro uptrend. The FOMC announcement is going to be key in setting the stage for the next big move. And we see all these major trend lines here. This goes all the way back to the beginning of 2022, and we bounced along this all the way, and we've got this downtrend. And this is, regardless of pattern trading, being aware of the grander context of what's happening in the markets, what's happening in the economy, can let you know, although this looks like it could push up, whether you're going to reject or not here, this is letting you know that you have to plan for both directions right now, or be very patient, which is the best move, in my opinion, right now, is being patient, let today's move play out, pick the direction, and then confirm basically what your bias is on the market and what your trading strategy is going to be. Now we can see here, this is concerning. As bullish as I am, we see the U.S. yield curve is now deeply inverted. Okay, what the heck does that mean? Well, recession is on the horizon. Why is this? Because this is the deepest yield curve inversion in the market has seen since 1981. And we can see each time this yield curve inversion happens, we can see this gray area is the recessions. And every time we get a recession to follow, and we have experienced this within the market. Now, one of the caveats I will point out here is we have had an astronomically bizarre sort of circumstance within the global economy, world markets, all asset classes because of the pandemic in 2020. It really set things in a sort of bizarre tailspin because, I mean, you know, I live in New York, and when the pandemic happened, it wasn't like a lot of places. Everything was closed, okay? And so we also obviously are aware of the supply chain issues that we've had since the pandemic and still have not fully been sorted out and fixed. But in addition to that, we also have major issue with what's going on I'm sorry, let me pull back there. We don't have major issue. We also have a huge consideration with China opening back up right now again. When they open up, then they're going to be using more oil, so that's going to drive prices of oil up. And all of these things have a sort of, you know, this domino falls over here. It might take a few months, but this domino hits that domino, hits this domino, and it does cascade across markets when all these things. And so none of the dust is settled from this massive world sort of shakeup and catastrophe that was the global economy shutting down in March of 2020. So there is a potentiality that maybe we don't get a fully defined recession because some of these things, can be. Maybe some of these things can be alleviated, and the market is going to bounce back in a way that we're not expecting. So we have to plan for both sort of eventualities. Now, coming back over here, let's go ahead and look at what's happening in the market today. We've looked at all these signals, these generational buy signals, generational opportunity signals. Now, what I want to do here is we're going to do very quick on Bitcoin. I want you right now, how's everybody doing? If you're good, put good. If you're not, put I want to do good. We're not going to be negative here, but we're going to do what we can to uplift people and be encouraging and figure out what we can do to support and help each other and bring each other along. But put in 2 coins you'd like me to do a TA on. I'm going to do 3 minutes here on Bitcoin because I've done Bitcoin quite extensively over the last week or so. I want to go through and do a couple 2-minute technicals on a bunch of different coins, as many as I can before 11:30 a.m. Eastern Standard Time. So put in 2 coins that you'd like me to do some charts on, and we're going to find some targets, see what's going on. And again, I want everybody to be patient and be patient with what happens with price action today. Do not trade emotionally because there's a high likelihood that there's going to be, a lot of interaction on the charts. Essentially, that's going to look probably something like this, where there's going to be, a push up and then a sell off and then a push up and then a sell off. And then once the dust settles, then there's going to be a clear direction on the markets. Now, this is going to only be further amplified by if the fact comes out that the number is higher than 25 basis points, we are going to see a massive sell initially, I would expect. But then if we get a very soft landing in terms of the way Jerome Powell contextualized it in the press conference, saying maybe this is the last cut, then the market will react completely the opposite direction. So you need to let these moves play out. If you weren't prepared leading up today's not the day to start buying and selling, every time the market moves one way or the other, because you are only donating your money to the smart money holders, the big wallets. So let's jump into these charts. So Bitcoin, we already mapped it all out. We did our macro, midterm. We're going to go straight down. I like the 24-minute chart. We're going to look at what's going on here. We do immediately have some divergences. I'm actually going to be using the BitLab trading suite indicators quite a bit more because this is what I use to trade. And we could see the hidden volume. This is hidden volume here. This is significant movement marking likely trend bottoms, likely trend tops. And this is when the move is moving too fast. If this is sticking out to the bottom side, that means the bears are out of whack. The bulls are trying to come in. If this is sticking out of this cloud to the top, this is saying the bulls are out of whack and the bears are likely to come in. So looking at where we're at here, we could see these bearish divergent flags on top. And I'm going to expand this. So you mudda. There we go. I'm going to make this full. And if you do want more info on these indicators, you can come over to bitlabacademy.com, go right here to indicators and get the full trading stack there. But we can see we got a momentum bearish divergence, and this also played out. I'm actually going to go up to the 1 hour so we can get some context here on where we're at on the EMA ribbon, which is this ribbon behind it, this colorful ribbon. And we can see this broke down below it. And now this is finding a little bit of rejection on it, as well as that we have bearish hidden volume divergence on this, which is not good. This is exactly as I would expect. Bearish hidden volume divergence, meaning downward pressure, mixed with a lot of choppiness here on the extremists. So no signal there because there's not really even much of a move. But we're also seeing a likely floor on the BitLab significant movement. So this is very undeterminable. So this is where yesterday when we were mapping out targets to the upside and the downside, this is where you start really fine tuning what those targets are for you with your, we can see this, we can see this sort of expanding broadening channel here, expanding wedge, broadening channel, however you want to say it, as well as this trend line that's flat right here. So if this were to break this level, I'm looking, the most immediate next level would be the 21.9, 21,000, and then the next level would be really anything above 21,000. If we break this 21.5 level, I'm expecting to actually test down a bit lower to the 19,600, or especially if we don't hold the 19,900. But those are the sort of levels I'm looking at. We are seeing weakness here, but as to be expected, we're seeing weakness from the bulls and the bears because everything is undetermined. We got 3 hours left, 2 p.m. Eastern Standard Time, when the FOMC numbers come out, and then at 2:30 is when the consideration. The press conferences around that. So that's what I'm seeing on Bitcoin. It's a little bit undetermined. It's leaning definitely more bearish, being that this can't break through this EMA ribbon. In addition to that, we have the bearish hidden volume, meaning volume is not supporting even the small move it's making. So I would hesitate to have a bullish bias here. But again, this is a little bit undetermined because of the FOMC. Now, I'm going to pull up my list here on the right so I can quickly go through these. I did algo yesterday. I did see Atom. Let's go ahead. Let's do Atom. Boom. Okay. Well, see, I already had this previously mapped, and I'm going to go ahead and turn off the BitLab market intelligence. We don't need to see the divergences just yet. Option, click on the screen. Oh, actually, it's option enter. No, double click on the screen. My bad. We can see we have 2 trend lines that I mapped out from previous price action, but we're looking at I've already looked at the macro, the midterm, and we're just going to be zoomed in here on the micro. We can see, look at this rejected right at this level. And so what I'm looking at here is, let's go ahead and do option. It looks like, okay, it didn't matter. Option F, that gives us a Fibonacci. If you're on PC, that's option Alt F. We're going to drag this across. We can do that. So this goes right up to the top here. And so I'm looking at, if we lose, this sort of level anywhere from the 13.5, if we lose this 13.5 to 13.38 level, which I can see the price as my cursor goes across. If we lose this especially 13.3, then I'm looking, the next target would be $12 to the downside. And the next one, the major one, I actually have orders in this region here, which is the $10.70 down to $10.50. This is a golden pocket retrace from this level, this low here at $8.40, all the way up to this top here at the 14.3 level. So that's the level that I'm looking at here. Now, let me zoom out on this a little bit. We can see this is a little bit wonky. It's almost an Adam Eve, which is a triangle with a rounding bottom. It's also almost a cup and handle, but this is kind of a wonky handle. Because I wouldn't really consider this a handle going to the upside. But what I'm immediately seeing here, I did not see this before. Option T. Let's go ahead and mark out the tops. Option T, if you're on PC, it's Alt. This is inherently bearish. We have a ascending wedge here, meaning this is pointing to the upside. The likelihood is it's going to break down. What I will say with this, though, is we have to take into context our technical analysis with what's happening on the fundamental landscape, on the broader the broader economy, and especially today, the Fed. This is an inherently bearish pattern. But it's not 100% bearish. This has about a 65 to 68% breaking to the downside sort of hit rate. But when we're looking at today, if we get positive news today, today positive news would be having a 25 basis point hike because everybody's expecting it, or anything lower. We get something lower than that, moonshot on everything. But even still, we have to be aware that this very well pushing up to the FOMC numbers and then the press conference, this very well could break down, come up, and then rocket to the upside. The markets in crypto, because there's so much less liquidity than in traditional assets, get pushed around a lot, and they trap people the opposite direction that the market inevitably ends up moving. So in this case, this is why I marked this out right here, this move and this move. To the upside, if you're trying to catch an upside breakout, you don't buy just because it just broke that the resistance line. You buy when it breaks out, pulls back, confirms the breakout. That's what a confirmation of the breakout is the bulls tried, they get a little exhausted, some people take profits, the market moves back, and these people that took profits are looking for if they're still inherently bullish and they are believing on the upside, and the market on average generally believes that as well, then this pullback will be an opportunity for those bulls to rebuy, defend this resistance now as support, confirm the breakout. So we need to do that. Same thing to the downside. And so it's the opposite of that. In this case, it's the bears taking profit on the shorts. They trap, the long people start coming in. They trap them. And then when they the bears come back in, defend this previous support now as resistance, and it moves, continue on to the downside. So looking here, if this does push to the downside, you don't just immediately sell unless it's part of your strategy and you have stop losses for whatever your action plan is. But if this is breaking to the downside, I'm waiting for it to push down to whatever it's pushing, and then waiting for that confirmation test here, and then not just right when it tests it, but once we start moving back with momentum and authority and volume back to the downside, that's when you enter that, if you're shorting, that's when you enter that short position because it's confirmed. Same thing to the upside. And this is on not only Atom, this is for all of the assets breaking today. I do think we are going to get some zigzags back and forth here, so we need to be careful. Wait for the confirmation on your trade. If this does push up to the upside, wait for a little bit of a pause at, this previous price action here or somewhere on this move to the upside. Wait for a little bit of a pause, a little bit of a pullback, and then confirm your move and get your entry. Do you miss a minuscule amount of percentage of not capturing 100% of the move? Maybe, but the consistency in your trading will go way up. The profitability and the consistency and profitability on your trades will go way up if you are patient, if you allow the trading opportunities to come to you, and you're forecasting them because you're seeing these divergences leading up to a move on a larger time frame. You break it down from the weekly to the 4 hour, the daily to the 4 hour, and then you zoom in here on the 24 minute. I hate that I always forget that my brush is on. There we go. And we could see here that on the 24-minute, let me double click, bring it up. Okay, now zooming in here, I'm going to come across so we can see everything. We're getting a lot of choppiness here. We can see bullish and bearish divergences back and forth. The bulls and bears, which is also obvious on this constricting pattern here, but there's no favor to either side here. Today's thesis is patience. Today's thesis is patience on understanding, knowing what to expect because the market's already priced in 25 basis points. So today's patience in seeing how those numbers play out and with everything with Powell. Now I do want to just shout out everybody. If anybody's new in chat, let me know that you knew. Let us know if you are new what your born on date was. That means what was the first month and year that you made your first purchase. Let us know in chat. We're really trying to build a community, build some friendships here, like get some regular names. We could chat with each other every day. Keep this going. And if you haven't yet, please hit that like button, hit that subscribe button, ding that bell. I really appreciate it. Whether you're watching here or on the Hit Network, hit those like buttons and subscribe over here on BitLab Academy at BitLab Academy on YouTube. So continue on. I saw a bunch of other names. Let's see, ICP. All right, let's do ICP. I don't think I have ICP in my chart set up, so this will be from scratch. I like doing these from scratch, so we'll do Binance. Okay, because this is from scratch, I'm not just going to take a blind. And now this, if you have any understanding of what happened with ICP, this is not a good looking chart, but this was completely crush and basically bad business practices from FTX, selling against them. So what I'm going to do here is I'm not even going to take the top of this. I'm going to do from this position, I'm going to do option J for horizontal ray option. If you're on PC, it's alt. I'm just marking these general weekly trend tops just to get a map that we can see in the future. Now I'm going to mark the bottom here. Now what we can do, I'm going to minimize this here and we can come over here to the daily. Now, first thing I want to do, I'm not going to do the entire fib because I don't need to on the whole move because it's not going up there anytime soon. We're going to do this fib and we're going to do this fib here, option F, click, drag. Now what I'm doing when I'm doing the fib, I'm taking it from this previous high, and once I open the fib, whether you do it over here on the left, you can either find it here or hit this arrow and find it, or option or alt F, and then I click there and drag my line down to what the bottom is here. And if we zoom in here, without even looking at any of the indicators, we can see that this is finding resistance right here, not only at the 382, which is the 38.2% retracement up to this move. This would be 100%, of course. That's what these numbers mean, by the way. If you guys didn't know, like 618 is 61.8, 382 is 38.2, 786 is 78.6% of this full move. So this is not only the 382 fib, which is a key fib. These are the main fibs I watch, but this is also previous price action support, and we're finding a lot of questionability here. Indecision, but the targets I'm looking at to the upside for a potential small take profit, retrace, re-enter, DCA in, take profits here, add to more longs at a lower position here. So this would be at the $7.40 to $7.60 sort of zone. We can map that out right here. I'll put this on that because I like to map out the. I'm going to change these lines. This is just what they were set up for the BitLab Academy courses yesterday. But I like to map these out so I can take the fibs off my channel, off the chart, so it's a lot cleaner look. So I'd be looking for a move if we do get positive. If we do get positive signal today, that there will be at least some sort of pause here. But this is a key level here. Maybe small pullback and continue. But this is a level I'm looking at. Now to the downside, we can do option J right here and option J right here. But then in order to find what the retrace is to the downside, what we can do is we do option F for fib. If you're on PC, it's alt, or come over here to the left side and you can go from the bottom and drag this up to the top. And now you have the way to see what your fib retracements are to the downside. So look at this line right here. I'd already mapped out. This is a local high. And this is also perfectly confluent with the golden pocket, which is the 0.618 and the 0.65. And this is at the $4.30, basically $4.40 area of region. And this is a level, if we do get rejected here, this is a level I'm looking at for ICP. Now, okay, a lot of people saying XRP. Let's do XRP. Man, how's everybody doing today? I hope you're good. I really welcome, I really want to say, I really appreciate all you being here. If this is your first time viewing the channel, my name is Kelly Kellum. We're doing this every day of the week, these longer form daily streams in the morning, and then lessons called the Alpha Series. I'm trying to do almost every afternoon, but can't do it every day because we're also filming for BitLab Academy. So definitely subscribe, ting the bell, come over here to BitLab Academy if you're watching somewhere else. Now we're going to jump into XRP. We might have time for this one and one more. Let's see what other Luna. Yeah, let's chart Luna. That's a good one. Let's do HBAR after that. XRP. I said HRP. XRP and HBAR. So we're going to do Tether, XRP, Binance. Okay, so I'm going to go. I'll go daily. Okay, now I'm just going to do a mapping. I like to do macro, midterm, micro. So I have an understanding on a chart. So even later when I'm looking at this, asset, maybe I don't look at it for 3 months and I see something moving, I come in, I already have it mapped out. Let's go ahead and get this level right here, because I could just see by looking at it, this level is also going to correspond with this level. Now we can do, we're going to do a fib. We're going to do 2 fibs. This move here from the top to the bottom, and then this fib here. A lot of people don't realize you can do multiple fibs on multiple moves, so you can take from multiple time frames and see what your levels are could be. Now I'm going to double click on the chart, bring up my indicators. Now I can see, okay, that's the daily. Let's come down to the 1 hour. Okay, we have bearish volume div, and this is starting to break down a little bit. But again, this is all questionable about what's the possibility of what's going to happen to the upside or downside because of the FOMC later. This does show bearish volume divergence, but this does look like it's started rolling around, as well as if we zoom into the extrema, this is not out, so this is neutral. This was a neutral solar signal, but you see this would have corresponded right with that bearish volume divergence, as you can see right here. Look at that bearish RSI, bearish hidden volume divergence, and we see this was sticking out. These two alone would say, okay, if you're doing just like very tight scalp trades, this would have been an entry. This is out, and this is also printing a bullish volume divergence. This is neutral here, but these two alone, when you're scalping, that was a signal to buy, and this was a signal for a probable sell. And both of those played out perfectly. Now, in this case, we're also seeing a little bit of support here on the significant movement. So what are the targets on this? Well, I'm going to go back into the chart. What happened to, there we go. Okay, so this is looking a little ugly. Looks like there's a bit of a channel here. There we go. It's kind of it's more of a channel than it is a ascending wedge. So what we can see here, I'm looking at this level here being confluent with this golden pocket, which is also these previous price action lows. And we can see right in this region, basically the 46 to 48 cents. There is some hesitation on XRP because there's not full clarity on what's happening with their case. Library apparently just in context sort of won against SEC. So that is bullish. I do think this does have the ability to get up to this 46K level. 46K. That would be ridiculous. This 46 cent level. This is also near this supporting sort of trend line here. If this were to break down, though, what we need to do, I'm going to turn off auto. What we need to do is this is kind of a bit of a wick on an hour. So I'm going to actually go from here. I'm going to go option F from here to the top. If this were to break down from this level here, which is also perfectly confluent with the 382, I'm looking at 30, 36 cents, 36.3 sort of cents in this region here. If we do go below that, then down to 34. But today, you got to be prepared. You got to be prepared for a wick down and then a moonshot up, also for a push up and then a breakdown. But these are the levels you can watch. And this is how I go through charting all these things so we can understand what our map is before all the excitement happens, before there's volatility in the market. You want to have all this stuff mapped out. Otherwise, you're trading emotionally. But with that, again, my name's Kelly Kellum. Thank you so much, everybody, for being here. Go follow me on Twitter at Kelly Kellum, Keloy, Kelam. Follow all these socials right here. Make sure, if you haven't, go check out BitLab Academy. Follow our Twitter and everything. And I hope you all have a wonderful day. It's going to be an exciting market today. Big love. Thank you, everybody, for being here. Put in where you think Bitcoin is going to be at the end of the week and at the end of February before you go in the chat. And if you're watching at a later point, throw it down in the comments. I hope you all have a wonderful day. Adios, muchacho. Over and out. I'll see you soon. Adios, muchachos. Thank you for watching. Adios, muchachos. Thank you for watching.